Um,
Okay, good.
it's nice to have all of you. I like seeing you. In fact, thank you for all of you. Let me see your faces on video. It is so much nicer to have something to look at when things are moving around. It's just somebody's picture because yeah, we need a little motivation to keep us on the straight and narrow here and keep us motivated as we do this. I like real estate. I like helping people do real estate, and I've taught real estate for 20 years, coast to coast. And I used to
Mhm.
do it with podcasts. I've been on TV, etc. And I found that I enjoy doing local real estate with local people more than just about anything else.
Mm.
And it's because I know everybody, and you guys are all my friends, and it's just nice. So, yeah, somebody said their wife is washing dishes this morning. Well, that's a good thing. At least you're here. Somebody asked me what time I got up in the morning, and I said, well, that that old joke about realtors, what's the first thing they do when they get out of bed? Eat lunch. I said that pretty much applies to me because I go to bed, it seems like around 1 or 2, and with a 17-month-old running around the house, that's when she's asleep and I get things done. So I put in the chat section here. There's a seminar on the 16th, which is Friday, and let's see, QR code. There's a QR code on the bottom of the top one there, and then probably we put this down there. That's probably. Let me see if that was a little bit better. You can look at it's about $100. It's going to go into depth. It's 5 or 6 hours. It's got I'll be introducing everybody and speaking initially, but it has got people that are doing this from everywhere. We're flying in somebody from Oklahoma. He's actually one of my best friends who is 29 years old. When I started working with him, he was a pizza boy, delivering Domino's pizza up in Pocatello. And 5 years later, he cashed a check for $7 million. And so, he is, really credible, does a lot of commercial and does a lot of seller financing and commercial. And so Dakota Worrell, he's going to be talking with us. And maybe I'll tell you about his last trip to the Ukraine. He said he was hiding under a tank, I think, 3 weeks ago. Went over there and it was a good thing. So, all right.
Randall,
Well,
that says Saturday on that flyer. Is it?
yes. Yeah.
Oh, okay. I
Six.
thought you'd said Friday. So Friday,
Sorry, Saturday 16th.
okay. Friday we have just as an FYI, and you guys, I just found out this last week that Google changed some of their programming, and so the training calendar that we all accessed through Elevate is no longer there. So we don't have a training calendar. We don't have any links. So I am trying to brainstorm with Jake this morning on better ways to get you access to all of the links for the training besides just relying on our weekly newsletter, because I know half of those just go to spam because of the nature of filters. So something that we're working on. Hopefully most of you have been able to save these links because we use the same links every week. You can just save like for example, this training, it's the same code every week for the Zoom meeting. So you can just save this as an ongoing activity in your calendars. But that's something that we're working on. And then if you haven't seen it because the calendar's gone, this Friday from 9 to 1 is the
In-person meeting, right?
yeah, the big equity office meeting and learning event down at the Salt Lake board. So that's the Salt Lake Board of Realtors. It's the one that we do like once every quarter with a lot of the different equity offices. And so, anyways, hopefully a lot of you can make that one. All right, Randall. Sorry, I just had to interrupt
Oh,
that because
that's great. In fact,
just
I'm
barely
glad you
discovered
mentioned
that.
that because I sent a text out to everybody, but all 400 of our agents, but that was like last week, and then I forgot about it. So without you telling me and without the seminar calendar, I'd be in big trouble. So that's awesome. All right. Thank
Can
you.
I
Oh,
interject something for a second?
yes.
I just went out to the calendar and it's there and it's active. And
Oh,
I actually got into this meeting through the calendar.
good deal.
Is that
Good.
in Elevate or
That's through Google.
through, was it, did you go to the Elevate page though?
No, no, I've saved a thing on in Google, so I can just go right
Oh
to the
yeah.
calendar. Yeah.
As long as you've saved it in Google, you're fine. That's what I'm
Okay.
encouraging everyone to do because Elevate just lost the ability to share the Google Calendar there. So,
Okay. So it's just through Elevate. Okay.
yeah.
All right, I'm going to share my screen with you here. And hello, Melissa. Hello, Virginia. We've got a whole bunch of people. There's Nick is in here. Good. Something this will apply to him, and it's good to see everybody here. And we're going to do this and move into the meat of this morning, and that so. Seller financing and why it could or should play an important part in your future. I've always found that the more tools you have, the more deals you're going to do. And the reason that is because, something might not work for one thing. Like, for example, I have had a client who called me and said, I need to sell my house, but I have no equity. Okay. And, I've only owned it for 6 months. There's no equity in it but I've got to sell. I'm getting a divorce and I've got to sell. And so the thing with that is most agents walk away. And he's like, I've talked to 3 agents and all of them said, yeah, they couldn't do anything unless I brought money to the table. That kind of sucks, right? But I said, oh yeah, we can help you. I'll be happy to help you. And we'll get this done. And so seller financing, placing a property on the MLS for enough down to cover the agent fees was not that hard. In fact, it's not that hard. You can get incredible prices on things because when somebody goes out to buy a car, Eric, what's the first thing they look at? Do they look at the price or is there something else?
Well, for me, when they look at a car, price is a factor, but they're looking at the things that they want in the car, you know,
Right. And then
looking
then,
features.
then what do they ask? What are the payments, right?
Right.
You know, what are the payments? And so if people, if the payments are good, a lot of times people don't care about the price. They want what they want, like Eric said, they want a house, they want it to be nice. But as long as they can handle the payments, that's all they care about. We've become conditioned to handling payments. Very few people have things paid off. And it's yeah, Luke, you were right, spot on. The payment. Yeah, I just opened this up on chat there. Yeah, spot on. Yeah, it's the payment. And that's why you can sell a home for $30,000 more than everything else in the area, $30,000 above even appraised value, and people won't care because it's the payment. If they can handle the payment and they can get in, no problem. In fact, I worked with a friend of mine, Alan, on a transaction, and it was a quick flip, etc. It was a crappy little house, um, but in fact, it was $130,000, and it's in Oregon where my daughter lives, and the housing market's really cheap there. But this truck driver came in with 115 grand down on a seller finance transaction. And it was probably only worth maybe $110,000. But he came in with that on a 1 year carry. So meaning that if he didn't come up with the other 15 grand in a year, then he lost his 115,000. And Alan and would have got all that money. So seller financing is very powerful. In fact, if you look on the screen there, it says many industry analysts estimated that around 80% of existing mortgages had rates below 5% as of early 2024, with a substantial portion, I've heard that's as high as 70% being below 4%. So it depends on where you look, I guess. So that means there's a lot of transactions out there. Now, some people say, "Oh, I can't afford to sell because I don't want to lose that rate." That 3% mortgage rates are going to loom large for a while because people, they don't want to lose that rate. And a lot of people can afford a house at 3%. They can't afford it at 6 or 7%, right? And so, we need to figure out how to get around that. However, people still need to sell homes. They're still divorced. There's still job loss. They're still, moving closer to family. They're still, we need more space. All of those things are still in play. And so, what's interesting is Newsweek said, well, many Americans may believe there's no way for them to feasibly get a mortgage rate below 4% with today's interest rate. There's still hope. Okay. It says, you could save more money with a sub 4% rate if you know where to negotiate and how to invest in your home, experts say. The way to get a mortgage rate under 4%, this is one way. Seller financing is another. This is one way. In fact, Nick Welland is somewhere here. I saw him on this call, but this is what Nick specializes in. It's a look for assumable mortgages. These are the mortgages insured by the Federal Housing Administration, or VA. Said 23% of active mortgages are assumable. So that means that there's at least 12 million mortgages across America. So that's pretty useful, isn't it? It's within that group, it says 14% or 7.2 million have interest rates under 4%. Now, one thing we've noticed is people are like, "Oh my gosh, Trump's in office," or whoever, and the feds will drop their interest rates. Well, what did we see this last week? Did we see an interest rate drop over the last 2 weeks? Heck no. What happened? It went up. All right. The mortgage interest rates went up. The Fed dropped, interest rates went up. That's because Fed rates have very little to do with mortgage rates. Okay. Mortgage interest rates are tied more closely to the 10-year bonds than they are to the Fed. So the Fed could drop a whole percentage point and the interest rates could still go up. And that's what we've been seeing here. So the Fed's dropped the rate and interest rates climbed twice in the last 2 weeks. And so that's kind of it's an important thing. And people, always say, "Oh, the Feds are dropping rate. The interest rates are going." No, it has almost nothing to do with it. It has to do with the 10-year bonds. So what is it going to take for Forbes says, what's it going to take for mortgage rates to drop? Because reality is starting to come home here. And reality is, it says, if you're going to wait for mortgage rates to drop so that you can purchase a home or refinance the loan on property you already own, you might be in limbo for a long, long time. All right. So it took 11 Fed rate cuts over a 2-year period to get rates from record lows to where they're at today. So it's going to take a lot more to have a significant impact. So that's something that's just is important. So one thing that's good to know is there is a lot of owner finance properties out there on the MLS. And you'll find that in these properties here, now if you put something like owner finance, it's going to pull up like 1,000 matches, which is what I did this morning. But some of those, it'll be they won't be real owner finance. The question I have for you, however, is, and just go ahead and blurt it out, unmute yourself and blurt it out. If it doesn't list owner finance or seller finance on the terms, what are your chances of getting seller finance? Anybody have any thoughts on that?
You can still get it.
Yeah,
Oh,
you
sorry.
can still get it. Yeah, that's right. Kim and Eric at the same time, great minds think alike, but you can still get it. Just ask. That's the important thing, is just ask. And if I mean, my head's getting cut off there. There we go. So just ask. A lot of people will seller finance. Just ask. So there's a few things, people always ask. This is the top, things that people ask me about it. It's like, what's a balloon payment, on a mortgage? Well, as real estate agents, we know that, right? It is the payment that when everything comes due. So let's say I do a seller finance, like my friend. My friend did a seller finance for a year. The truck driver put $115,000 down. He had crappy credit, and he had great income because he owned his own trucking company. And so he'd just gone through a divorce. I don't know what had gone on there with his wife, etc. But anyway, his, credit was, like 600. It was in the toilet. But he had cash and he had money and he had means and he had ways to pay for things. And so he was happy to do it. But a balloon payment would be something like this. I'm going to sell my home to Melissa Malambo, and I'm going to give it to her at 4% interest at $800,000. and she's going to make payments over the next 3 years. And then at the end of the 3 years, there's going to be a balloon. She's going to have to bring, the rest of the $800,000 to the table and pay me off. Otherwise, I can take the property back. So that's a balloon payment. And most of the seller finance that I see, not all of it, but a lot of it is short term, meaning, 1 to 3 years or 1 to 5 years. Now we're flipping quite a few houses. I think I've got 8 currently that are going. I had 12 last month, and about 40% of those are seller financed. And so we usually run anywhere between 40% and 50%. And then we just ask, we go in, we show up, we say, hey, we'll pay you cash, we'll close when you want, one day, 3 days, a week, a month, whenever they want to. But would you consider carrying the note? And people like to carry the note because otherwise I'm using hard money at 12%. And if we use my money, I still pay myself 12%. And so we just ask. And, about half of the people say, yeah, okay, that's good. I'd rather make, 5 or 6% or whatever else because I don't have anywhere to go with the money and the bank's only going to give me 4% and it's secured by real estate. So, I hope that you guys don't follow through because I would want you to not follow through and then I can take the property back after you've remodeled it. Monica, go ahead and unmute yourself.
You can tell me if you're going to, answer this question later on in your presentation, but I just have a question. Most sellers are in the position that they need that equity out of their home to be able to move forward and purchase a new house in a different area or whatever. Is there a possibility that seller financing can still work in that
Sure.
scenario?
Yeah. I don't know, maybe most, but I would say a lot don't, because a lot can qualify for 2 homes. And if you have, the mortgage rates are changing currently. Have any of you done a property with a client recently that has a mother-in-law in the property that's empty? And what happens there with that? What do they do with that? Do you remember talking to your mortgage guy on that? If not, I guess I can tell you. So basically what they're going to look at and say, what would that mother-in-law apartment, like, look downstairs in mine, what would that rent for a month? $1,700 a month. Now, mind you, my apartment's empty, right? But it's $1,700 a month. So when the person that comes to buy my house, that I'm closing on, in the middle of next month, they can say, hey, $1,700 a month of that income goes towards, my being able to qualify for a mortgage. And so they'll add it in there. So a lot of times, if you have a contract and you're selling a property on contract, they'll count that as income for you. And so
Usually they can count about 75% of it, can't they, of rentals?
yeah, it's like 80 is what I found is most common, but yeah, about 80% of that. Yeah. And so you're absolutely correct, Eric. So
Even if there's no history, of them renting it
yeah,
out.
no, this has just
What the
happened
potential.
this year. Yeah. It's just whatever the potential is, or a contract if you've got a contract, because there's no history with the mother-in-law either, but they're counting the $1,700, and that's why it's making it easy for them to qualify for my house. The loan officer's counting $1,700 in income coming out of my basement apartment that I've finished off down there, and so they're that's something that they're liking. So yeah, and remember, when I started this out, I said the more tools you have, the better off you're going to be, right? Because sometimes one tool doesn't work. So when I go and talk to somebody in my team, what I've taught them to do is I'm an investor. I'm also a real estate agent. And so I'm running it through a mental sieve of what's going to work. Okay, can I wholesale this? Because that's easy money. Can I put it under contract and sell the contract? And I think we did 1 or 2 last month of those. The second thing I'm looking at is, can I flip it? Am I able to do a flip on this and make some money? The third thing I look at is, can I do a rental? Can I turn it into a rental, a long-term rental, and cash flow it? Fourth thing is, can I do a sandwich lease option? Because maybe, I don't want to take title, but I'd like the cash flow on it. Is that going to work? And then the fifth thing that I look at is, I guess I can turn my hand this way, is, can I collect a commission on it? So I've got 5 revenue streams right there. And that works for me, because I wholesaled one last month and or maybe 2 I did, and I think it was 30,000 on one and like 50,000 on another. That's easy money. It's quick. I do it in days. Rory can collect a $15,000, or $20,000 commission on it. And so the more tools you have in hand and the more that you're aware of and cognizant of, the better off you're going to be. Because everything is not going to fit into, into a specific box, because some people need to move, right? And, yeah, they want cash and they want to move, and let's say they want to buy a house somewhere else. But I've had a lot of people that'll wait a year or two, and I asked them, I said, I understand you want to buy a house in Missouri or whatever, you got a job there, but, have you considered, seller financing your house here and then renting for a year or two? Because right now it's cheaper to rent than it is to own almost in every single municipality in America. In Utah, it's about 40% cheaper to rent than it is to buy. And so, if you rent, for a year or two, you might save a little bit of money, but then you're going to find out what area you really like in Missouri because you're not familiar with that area. Or you're going to, test the neighborhood out, see if you like the neighborhood, et cetera. And surprisingly, you get a lot of people that'll say, yeah, no problem. I think I'd like to do that. We'll rent for a year or 2 or 3 or whatever else because they're going to get top dollar for, for their property here. So people ask, well, who owns the title to the house with seller financing? Well, whoever the buyer is. Okay. And it doesn't matter whether you're doing a wraparound, which is where they take the existing deed and you wrap around it, or like my house, I own it free and clear. And so I can do it where, we're just doing a trust deed and note on it, or you can use a trust. I like trust the best because it keeps anonymity, and there's a couple of legal and tax reasons for that. Or you can do it like Jack's Petty likes to do it with this bond for deed or contract for deed. It's not my favorite, but it's a viable way to do it. And it doesn't matter how you do any of those. The title is always, or equitable title, equitable interest in the property, all the tax benefits, all the income, everything flows through to the buyer. And then people ask, well, are the interest, rates lower with seller financing? And that depends. So a lot of times, yes, they are. Some people can afford to pay 6% or 7% interest on a property. I've got one guy I'm working with on a commercial deal right now on a building that I own, and it looks like he might be up around 11% as far as his interest rate for this commercial property. And so, and I'm looking at that because I'm thinking to myself, I might be interested in carrying that note for a couple of years, at 11%. And, it's good money, but they are lower quite often, and you can negotiate much easier with an individual for interest rates than you can with a bank. And so my personal experience has been that they're a lot lower than what I would get using conventional or other financing. And so the bottom line is it's a good alternative to traditional financing, traditional mortgage. And I don't know how it is today, but I know during the 2008 to 2013-14 crisis that they were comparing seller finance transactions with bank transactions when it came to foreclosure. And seller finance transactions were only 15% of what they were for banks. And I think that's because the parties know each other. The parties are aware of each other, and it's, two individuals like Monica and I, or Eric and I, or Barbara, or, Kim, or anybody else. And instead of, this nameless, faceless bank. And so that's something that to just be aware of. So like this one here, I just pulled it, on the off the MLS today, 23 hours on market. It was out, in West Valley, I think, Kearns probably. Yeah. It says explore a flexible seller financing option on this charming single level home in Kearns with either a very low down payment or a standard down payments of 15 to 20%. They're out there, they're on the MLS, they're out there. Some of them list it boldly like this, and other people don't. Again, this is in the chat for those of you that came in late. I would urge you to spend 6 hours at a seminar this weekend, this coming weekend. It's around $100, and learning the ins and outs of owner financing or seller financing, just because there's so much you can do with it. And the nice thing is that you can do it everywhere. You know, people say, "Oh, you can only do that in Kearns," right? Nope. I did this house in Canyon Rim. That's like, $1 million home. Harvard, Yale, probably or arguably the best, the most expensive real estate in Utah, for homeowners. I did this house there. I've done them in West Valley. This one was in West Jordan. I did it for 3,000 down. I'm great friends with this guy. It's Galen, and it was funny because he thought, yeah, I can handle some money. I want to move to St. George. I'm retired. He's a postal worker. I just sent him a handgun. He says, I'd like to go out and do a little shooting, etc. And I thought, he says, but it's so expensive. I said, you need a 22, so I sent him a little 22 revolver. It looks like a cowboy gun. It's got the old aces and eights on the handle, and so he's down there plinking away with it. But $3,000 down. I just said, what do you need to move down there? How much down would you want from me? And I didn't even need to suggest a number. He says, I need about $3,000 for a moving truck. And I said, sure, no problem. So I put $3,000 down on that one. This one I did zero down purchase in West Jordan. And the story with this one was I had a guy and a girl who had lived together for 9 years. And here's a plug for marriage, but they've lived together for 9 years, and he found a new girlfriend, I guess. And so in any event, he had gotten ambitious, and you can see where these three windows are. So he'd gone in there and taken that down to the studs. Well, can you get bank financing with a house that's incomplete like that in the main living area? I said, Don saying, no, yeah, you can't, you can't get bank financing. And so when you're trying to sell it, you're going to sell it for a massive discount, or you're going to sell it, on seller financing. So I went in, this lady cried, I've talked to half a dozen agents, and, it's going to destroy our credit. My boyfriend's leaving, and, and he wants me to get rid of it too. And, all this kind of stuff. And so I told him, I said, well, I can't give any money down on it just because, I've got all this work to do, whatever. And it didn't have a lot of equity, but I knew that if I did a remodel, maybe a little addition on it, that it'd be a good thing for me. And so I said, but I'll take it over. And they were like, oh, thank God, praise God, it's an answer to our prayers. So I fixed that up. I rented it out for a couple of years, and I think I cleared about 300 grand on it. So not bad. What is the rate of return when you have a zero down and a $300,000 return? What's that rate, Luke? I can see Luke smiling there.
It's an infinite return.
It's an infinite return. Yeah. Those are nice. The infinite returns are great. That's way better than crypto. Put nothing in. And so out here in Sandy, here at these two houses I did, and both are on the same street, $30,000 down. This one's my house that I'm living in currently, and I just had an appraisal done on it. This was a good gig. This was a really good gig. So one of my agents had this property listed, and I just went to look at it because you can see this huge garage right here. It's like 40 by 60, and it's 2 stories tall. And so I'm driving along. I see my agent's name on the sign, and I walk back in there. And then this is right on Dimpledale. And so there's a creek behind it. And I walk back, and there's people rafting down the creek because there's a lot of water in it, and whatever else. And I thought, oh, this is great. This is just like Oregon where I grew up, on a lake and the river and everything else. And yeah, sadly the creek dried up like 2 or 3 years later because they finished the work on the dam that was up above somewhere in the hillside up there. That's what dried up to almost nothing, but it was pretty cool for a while. And so I went in and looked at, loved the shop, the garage. Every guy wants a shop, right? And so uh, it didn't sell. And it didn't sell, and the listing expired. And so I called the agent up and said, "Hey, what was the deal on this listing? Why didn't it sell?" And she said, "They just didn't have enough, equity in it. They couldn't, they couldn't pull it off. We couldn't sell it." This was, a few years back here. And I said, "All right, do you mind if I contact him?" So I contacted him, took care of my agent, and worked out a deal. And I put $30,000 down on this. But it gets better. So 2 years later, I said, I could pay you guys off instead of carrying the note for 10 years like you agreed to. I could pay you off now if I had a nice discount. And so my discount was significant, and it was a significant part of the $30,000 that I put down on that property. So, if you get 15,000 off of something for doing a refinance at 2.5%, it's not a bad gig. So it was a good deal. And then this one here, I did the same thing, $30,000 down. I flipped that house, made $200,000. So it was a nice gig. So and then if I should zoom this out, because I did another seller finance over here. There's a street that's just on the top of this. And one block over, I did another seller finance last year on it. So yeah, they happen everywhere. There's a lot of times things are really unique, because on this house here, we closed it out in West Jordan, and they just wanted 20,000 down, no payments for 6 months. It was 386 because the house was real rough. Okay, I mean, it wasn't qualifying for finance. It's stinky. It's got holes in the walls, dogs, everything else. And so, you're thinking, okay, that's not a great deal. And it wasn't selling, and they were, in a hurry to get out. So 20 grand down. But let me show you what was awesome about this. So $100,000 lot split. Okay, so what we did was we were under contract. It was no, that's the wrong. It was more than two. There was like 386. Let me. Get back. I must have got something wrong here. But what we did is we walked back in the backyard. This guy here is a builder of some kind, had these tools and a couple of trucks back there. And so we went and asked him, and we said, this lot's deep, and you can split off the lot and not lose a dime in value from the property. So we walked back to him and said, how'd you like to buy 28 feet of this lot, and what could you pay? And the guy said 100,000. And Trevor said, how about 110? And the guy said, done. So we closed on this and collected $110,000 before we even started remodeling. So that actually paid for the remodel on the property. So it was a really good deal. You got to be creative. We've done this hundreds of times. We've done it here in Utah, all over the place, Oregon, Missouri, St. Louis, other places. So when you learn how to do seller financing, I just use this from a presentation I'm doing later. So you're going to learn how to spin straw into gold. Okay. You're going to take and do something to nothing. And so, personal story. This is the home of Maximilian the 15th in Germany. It's a place called Preußen, Germany. It's down in East Germany. It's a castle at 65,000 feet. It's there's another building over here that's even larger, as large. It's on 15 acres, and it's right on the Elbe River. So I put an offer in on that castle. I'm going to ask you a question. It's somewhat rhetorical, but can you do seller financing out of the country? Your head should be going like this. Yes, you can. And this was a seller finance transaction as well. Sadly, I got home and I heard I want a divorce and I want all the money, etc. And so that put an end to my castle dream, dang it. But yeah, and it was like it's right here. I mean, it was all this land, it was these buildings, it was awesome. It's Sluis means castle, but Sluis Prosen, right on the Elbe. So I started over again with $8,000 because I told my ex-wife, I said, the money's never made me happy, take it all. I need 2 months worth of run rate, 2 months worth of living expenses, and I'll be fine. So I gave her everything but 8 grand, retirement, everything. And that was what's that, 11 years ago, 10 years ago. And so anyway, I had $8,000. 4 years later, I was up to 1.4 million using seller finance. So it's a big deal. It has to do with market timing and picking up, some of these outlier skills, etc. And then I want to go back to the MLS here, which is, so these are all I put in, seller financing, etc. As far as the terms, there's 410 of them. They're all over the place. You got St. George, Washington, Terrace, Orem. Um, these are just the ones that say that they'll do seller financing. They're already thinking about Hooper, Ogden, Saratoga, Salt Lake, Brigham City, Fillmore, Lehigh, Tremont, Pleasant Grove, Ogden, North Salt Lake, South Jordan. I mean, basically Sandy, they're everywhere. There's a $3 million one in Sandy, if you want those big ones there. Park City, same thing. Um, and they're in all price ranges from down, Clearfield at 75,000. That must be a mobile home, all the way up to what, $4 million, right? And so I just pulled out. I like to look through that, but and there's 400 of them. I mean, they're just all over the place, and so they're there. You just got to know how to look for them, right? And when somebody was asking me early about these, yeah, people are willing to sell those, and so if you've got a buyer, you can put them in, and you don't have to qualify. It's not like you got to show them your credit score or anything else. So some people ask for it. I've never been asked. I've done hundreds of these. Nobody has ever said, Randall, can I see your credit score? It's like an 810, but nobody's asked. In fact, when I was young and stupid, I said, do you want to see my credit score? And people were like, this one person, like, yeah, that's probably be a good thing. So I showed it to them. They're like, okay, no worries. All right. So there's a lot there. So let me pull in here. So we've lost a huge chunk of, the market. It's like inflation's heating up. More than 60% of America are living paycheck to paycheck. It's, inflation has just, thrashed us. Credit card debt, etc. We've lost 11% of the market, I think, between the every 1% moves out, sorry, every 1% rise is an 11% decrease in buyers. So if we went from 4% to 6%, we lost 22% of the market, 20%, 2% of the buyers. And so we can actually put them back in the market. And so that's important. So there's a few things. Let me come down here and see what else I want to hit. So obviously, the wider your skill set, the less likely you're going to be affected. So, and here's one of the things that I like about it is that it gives you larger buyer pools. Okay, you're going to edge out 99.9% of the agent that are clueless and don't even have a clue, because now you know this. All you have to do is say, "Hey, Randall, how do I do this?" You can close in days, not weeks. You get more deals, close faster. There's no due on sale jail. People always ask, well, isn't there a due on sale clause? No, there's no due on sale jail. Okay, it's not against the law. No problem there. I have done seller financing on Utah housing. I've done seller financing on everything, all the stuff that they tell you can't do. Utah housing, you just do contract for deed or do a long-term lease option that looks exactly like a seller finance transaction. And I set one of those up for Ingrid, who's my secretary. A lot of you have talked to her. So there's no due on sale jail. You just do it the right way. Use a good title company. GT Title is my favorite for seller financing transaction. They do more than anybody else in the state. What an acceleration clause or due on sale clause just means that the seller may at its option call all sums due and payable. Well, with 147 banks, including U.S. banks, Zions, etc., on the watch list for being weak, Do you think that banks really want to call a note due that's getting paid right now? Yeah, nobody's calling this due. I reached out to title companies in Utah, Colorado, other places. Nobody's calling these due. Anybody that tells you they're calling these notes due is freaking nuts because they're getting paid and people are happy to have them there. I can't even remember the last time that I think I had one where the bank asked some questions, but I had it in a trust. And according to the Garnt St. Germain Act of 1982, the bank can't call the note due just because you put the property in a trust. And so I quoted Garnt St. Germain in 1982 to them, sent them over a copy of that, and never heard from them again. But it's been probably 7 or 8 years since I've heard of anybody calling a note due or having it accelerated. Does it happen? Yeah, it happens. It's pretty rare, but there's a lot of things you can do. And people will say, what could you do? Well, number one is you can refinance it. Number two is you could deed it back to the seller. Okay, and that usually takes care of that problem. And when we've done that in the past, for other people, I've had agents say, "What do I do?" And so I helped them do that. We just set up a lease option that looks exactly like a seller finance. Same payment, same terms, same everything. It's just a seller finance, a long-term seller finance transaction. In fact, I think Ingrid had one that we did for 14 years that way. And, it was just fine. And it was with Utah Housing, because they didn't know what they were doing starting out. And so they brought me in. So you just have to disclose. That's the big thing you got to do. When you're doing seller financing, you got to disclose. You always have to disclose. And so, people are going to do this. The benefits for the seller are quick closing, continued payments, income over time. Because you can get 6%, easy if you can provide a property to somebody that might not qualify, but they've got cash. And there's a lot of those people out there. And 6% is way better than the 4% the banks are paying. And you're getting there. And here's the thing, too. So you're making money on the spread. So let's say we've got a house that's $600,000 and it's at 4%. And you have seller financed that at 6%. And let's say that the seller has, out of that 600,000, they've got a loan for $500,000. So do they get 6%? Do they get interest just on the $200,000 they have in equity? Is Luke paying attention here? So I figure Luke usually jumps on this
I
one.
was searching seller financing things on the MLS. I was trying to what you
That's
were doing
good.
earlier. Say it
So
again.
let me run this scenario for you here. So Luke, the seller has a house that they are seller financing to a buyer for $600,000
Mhm.
and at 6%. Okay. So they have $100,000 in equity. They have a mortgage for $500,000 that they're paying on at 4%. If the seller sells that property to the buyer at 6%, are they only making the interest on the $100,000 in equity they have?
No, they're making the spread of the principal pay down as well.
So 2% interest. So let's see, 2% on the 500,000 that the bank's carrying. So 0.02 times 500, because I'm not a mathematician, it's like 10 grand. They're making $10,000 a year in interest on top of the bank's interest. Turning straw into gold. It's something that's, and they're 100,000, they're making six, so they're making 16,000 a year in interest off of that deal. Besides any principal pay down, whatever. So it's a good deal for them. You can do anything. You can leverage against properties. All buyers qualify. If they bring in cash, I don't really care much else. I want to, if they have really crappy credit and they look like they're scary, I want more cash down. But it just works. And it benefits, for both the buyer and the seller. I mean, they're just there. Lower interest rates can be good, or just able to purchase the property, selling for top dollar, even in a rapidly declining market. You've got a wide buyer pool. They're collecting more interest income, and you can defer the tax payments over time as well. They can sell to who they want to. If it's a married couple, you can get 500,000 out without paying taxes on it. So I mean that's a good deal. It's just it's a great deal. It just works. And let's see, no PMI. That's always good too. We're running out of time when I come here. So here's a few types here. You've got rent to own, so lease options, master lease options, and master lease. So LeBeau White's one of my agents. He did one of these deals where he knew a guy that was going on an LDS mission as a mission president up in a nice neighborhood. And so they wanted somebody to rent their house that was going to take good care of it. And so they leased it to LeBeau, understanding that he was going to sublease it. And so he made $1,000 a month off of that. So he made $36,000 while they were on their mission just off of handling that. And he set it up to where the people on the mission would cover repairs in excess of $100. And then he would cover anything under $100 for repairs. And then he made the tenant cover anything up to $100. And so, it was a slick deal. And he's done things like that many times, but it's a good gig. So seller financing contracts and outright purchases, you got bond for deed or contract for deed. That's where title stays in the name of the seller until it's paid off. The buyer has equitable title or equitable interest in the property, so all the same tax benefits that anybody else would have. If they rent the property, they get the rents. They get the money. Everything flows through. A trust deed and note or a wraparound mortgage with a trust deed. And Jack's Petty does those contract for deeds quite often. My favorite is using a trust. So I put everything in a trust, and I'll use a wraparound just because of Garn Saint Germain. They're less likely to call those due. I've never had one called due, and I've done hundreds of these over the last 20 years.
Hey, Randall,
Yeah.
how do you get a trust? Like, I've heard it's expensive to set up a trust. So like, what do you do?
It's cheap. I can do one in like 10, 20 minutes. But go to GT Title, ask for Christina.
Yeah.
I've done a class like for $400. I'll give you an hour class on trust and how to use them, as well as all of the forms and files and everything else for educational purposes. It's a $400 donation to our charity, or you can go to GT Title and have them do the work for you. So Christina Moser will do that. Yes, Mike, I saw your hand go up.
Yeah, so I remember you talking about this before, and I was wanting to ask you. You were saying that sometimes you put your business in a trust or trust. You own something with the business and a trust together, but which comes first and how?
So you're probably talking about hiding assets or hiding who you are, everything else.
Or
You can
protecting them
you can title
anonymity.
your car in the name of the trust. You can put your house in a trust. I would tell everybody, Eric, me, everybody else, put your house in a trust. There's a lot of reasons for that. There's a lot of reasons to put it into a trust, and then somebody could buy it and put it right into a trust. But one is it keeps you out of sight. People don't know what you own or who owns it. If you get sued, the beneficial interest is pretty easy to change, and that's something that's not recorded. So they might sue you, but you might not have interest in the property anymore because it was, the beneficial interest in the trust, went to somebody else. So there's a lot of reasons to put it into a trust. And I've put everything I have in a trust. And there's been very few exceptions, maybe, I don't know, 5 or 6, I guess, over the last 15, 20 years.
Randall, I have a question. Do you put every property in a separate trust, or you hold
Yes.
this all
Yes.
in
Yes.
a separate trust?
Yeah.
And then you put those trusts in a trust?
So hold on a second here. So typically this is what I like to do. So I would like to have an LLC be the beneficiary of the trust. So your business, like Mike is asking, so they could be the beneficiary of the trust. And, that's going to give you a little more protections. What a trust is like is, think of a smoke screen. Like, when you're watching those army movies, they throw those smoke grenades out there so you can't see what you're shooting at. makes it a lot harder to hit somebody when you can't see them. And so here's a real world example. A few years back, I go to court. Um, I got custody of my kids. I raised them until like age 15 and 18. Myself at 15, my son decides he wants to go live with his mom. I say, okay, that's great. You can do that, but we're not going to court. And if we go to court, you're not going to get anything because I was willing to be fair with her. And, and I think the fact was she cheated on me. So I didn't trust her, you know. So, anyways, I sent my son to live with her. 2 weeks later, I'm getting served. And she never got a dime. In fact, she ended up owing me money. But we went to court. She's got two attorneys there, and I'm sitting there with my attorney. Mr. Wall, do you own any real property? Well, what was my answer? No, I don't own anything. What about the house you're living in? Do you own that house? No, I do not own any real property. Because as a beneficiary of a trust, what I have is a chattel interest. So the trustee is who's officially on title, which can be a lawyer. At that time, I think it was my brother-in-law in Turkey, works for the government, all these different things. And so they hammered on me for a while. And by the time we went out, she owed me like $30,000 and I never had to pay child support or medical. It was all on her. And because, I said, no, what do you earn? I earn what she earns. No, I don't have any property, So I've gone through this a few times. It's always worked out very well for me. Maybe it won't at some point in the future, but it's always been good. So I would always do, put my property in trust, personal residence, everything. It's just a good idea. In fact, I had a guy down in Lehigh. Now, I don't know if this was the most ethical thing for me to do, but this is like, I don't know, it was like 2010. But he said, I got a notice from the IRS. Actually, it was legal, so I did it anyway. But I got a notice from the IRS that said they're going to lien our property in 60 days. We want to sell our property and get cash out, et cetera. And no, it wasn't 60, it was 6 days. So I put the property into a trust and I sold his property as an agent. And so since I knew how to do it, I said, I think we can maybe get around that. So I slapped it into a trust. I think it was a $400,000 property. It wasn't a lot, but it was, properties were cheaper then. And so it took title out of his name because when the IRS or anybody else gets a lien against you, it attaches against anything that's in your name. That's why having your property in trust is good because it's not in your name. It takes it out of your name. So if you ever do get a judgment against you, it won't attach to your house, your property, etc. And so I actually did that 2 or 3 times during, even the foreclosures, period, etc. I had a guy that had a house that looked like a castle up by the Draper Temple. And he had another one that he owned that his mom was living in that he was going to move into. It was maybe $500,000. I just put it into a trust, and we had no issues with it. So we were able to do a short sale on his, no issues there. And it worked, So I think that when you're trying, things out, become educated, learn a little about a lot of different things. So I'm running out of time here. And so every situation is different. So how you choose to do it is up to you. I always say never lie. You got to be careful, listen carefully to what I'm saying, but I don't ever lie. I always tell the truth. That's important. Stay inside the law. That's important as well. Garn St. Germain Act works real well. You can look that up on your own. It's the Garn St. Germain Act of 1982. And you can see how it applies, to agents. But there's paperwork that we use. I can show you these, CYAs that we have that you guys can copy and paste. In fact, let me see. I think I might have that. See if I've got CYA latest here. I might be able to put that in here. Okay, and I think, let me see if I can get that one in. I'll drop it into the chat here and see. I think this is my latest one. I'm not absolutely certain, but it's let's see, is that gonna work down here? I think it'll work. But it's quick. I mean, I got it to you quick. It's from I think the end of last year. So you can just when you look at this, you can copy and paste. So special Rep C clauses for buyer, agent, et cetera, seller financing. And then we've got, some other ones in there. And so I'm not an attorney. And there should be, and I might even, I think I've got another one that's even longer that's got more options in that. And I'll try and make that available to Eric. I'll look in there, but this is the one that I had at hand here. So there's just a lot of stuff on there. And so the key is to know what numbers to call. So call Eric, call me. We'll be happy to do that. Even if I'm living in Nepal or when I'm in Nepal, when I'm working, I'll still be available for questions and Q&A and, everything else like somebody asked earlier on. Always happy to answer questions. And Eric is always available. He's like, Mr. I'm up 24 hours a day and I love answering my call. But that's why I do this together. And so we love equity. We love you guys. I think one of my favorite things has been when Eric and I bought the company a few years back and we're able to steer things in a direction that we thought was a good direction. So do we have any questions really quick here as we finish up? I'm happy to answer them. Barbara, go ahead, unmute yourself. If you had a question. Yeah, you're muted. I can't hear you. I just saw the hand.
Hear me?
Okay. Yeah.
Okay. Just I kind of lost you along when you had the house up by the temple that you put in a trust. Were you the realtor for them? And can a realtor
Yes.
help them put it in a trust? Is that
Sure.
what they suggest?
All you
Okay.
need to do is say contact GT Title and have them, we can put your house into a trust.
Oh, okay. That's good to know. Okay.
Seller financing scripts for approaching sellers. Luke asked that. I'll have to take a look and see what I've got in there. Usually I've just been doing it for so long that myself and my team, it's off the cuff. But when I started out, I'd say something like this, what are you going to do with the money? When you sell your house, what are you going to do with the money? So Monica asked, that earlier. She said, what about people that need their money? A lot of people don't need the money. I wouldn't need the money to buy another house. I could buy another house without the money. So they say, what you're going to do with the money? And, a lot of them will say, I don't know. I think we'd probably put it in the bank. Well, what's the bank paying for interest? Like 3% or 3.5%. I think I saw 4% the other day. And so I would say, well, how you had a mortgage on this one and the house was a collateral for the bank loan. How would you like to be the bank? If you do a seller financing transaction here, this is what that would look like. You would carry the note. So if I'm flipping it, I'd say you would carry the note for 6 months to a year, at most typically while we're fixing it and flipping it. And so we're fixing it, we're increasing the value, right? Because we're remodeling the property. The value is going up, your asset's worth more and more. And so you're well secured in the property, just like the bank, and then you get to collect the interest on it. And so do you have a mortgage on it? Well, yes, I do. How much is it? Well, it's 300,000. Well, guess what? We're paying interest above and beyond the, 2.5% that you're currently paying on that. So you're actually going to get to make money on the bank's money. So not only are you going to be able to make money on your money, you're going to make money on the bank's money. Does that sound like that was something that would be appealing to you or maybe not? And I'll use like a negative close always. Would that work for you or probably not? And it's because when I say probably not, a lot of people will say, oh yeah, that will work. They're trying to figure out because when you're an agent, when you're a buyer, when you're whatever else, it's an adversarial relationship. We don't like it to be adversarial, but it is. One side is trying to get the most, the other side, wants the least. And so you need to put it in there. So if right off the bat, I say, would, paying you, 6% interest on, your property, and helping you earn that interest on the interest spread on your mortgage even, would that be something that would appeal to you or probably not? And they're thinking, well, if he's saying it wouldn't appeal, then it probably would appeal to me because I'm on the other side, right? And so it works, but my closing ratio is about 90% when I get face to face. And so that's been, it just works because the confused mind always says no. So go in understanding. And if you don't know, say, my team's been doing this a lot because Eric, am I on your team? Eric's got the thumb up, I'm on Eric's team and you're on my team and you're on Eric's team and we're all on a team together. And so our team's done a lot. So I can guarantee you that in this group here, there's probably 100 years of collective experience of seller financing, on our team, so to speak. So say, my team's done a lot of these. Let me make a phone call and get back to you. Because if you don't know, don't BS them. Don't try to BS them. Say, I'm not, I'm kind of new to this, or I'm just, doing this. My team is well experienced, but I'm not as experienced on that. Let me make a phone call and get back with you. Sometimes that's so disarming to people. They love that and they'll do business with you because of that alone, and it's because you were honest and, they don't feel like they're dealing with a shark that's done, 500 of these, and so it's just, be upfront, be honest, be personable. And this one here on mine, like this is the buyer agent or whatever it says. I'm a real estate investor. One thing I like to do as far as clauses, if I'm on the buy side, purchase price might not reflect the fair market value. I just throw it in there. I throw a ton of boilerplate in there. Like my contracts are 15 pages long and I've never lost a deal. Nobody cares. They're used to seeing legalese. You buy a car, you're doing 25 pages, it seems like, of signatures. So any other questions? I would say go to that seminar if you can. It's well worth it. It's one of a kind. The seminars like that are usually $400 or $500. It's done through the Salt Lake and Real Estate Investor Association. I was president there for 13 years. If you get one idea, I have found that if I get one idea, I am, blessed, because if I get one idea from any seminar I go to, and people that attend seminars are typically in the top 10% of their field. And so that's a reason to go to seminars, is people attend seminars are always in the top 10% of the field, according to every study I've ever read. And so it's just, this, for me, all the seller financing stuff is the culmination of many years of seminars and experience. I'll give you one other thing that you can do here that might be appealing to an investor. You'll forget this, so you want to listen to this on the YouTube video that Eric's recording. This is how I went in to a closing as a buyer and walked away with about $40,000 at closing, which didn't affect my purchase price at all in the property. So when you put a property under contract, you're looking at a property under contract, have them pull title, okay? And if they've got a bunch of liens on it, you can buy those liens for pennies on the dollar. So I bought this house over in West Jordan, and I looked at it, and they had a bunch of people. There was agents looking at it, investors, everybody's looking at it. And I looked at the liens that were on this property, and they had $65,000 worth of liens, bail bonds, contractors' liens, et cetera. But there's $65,000 in liens there. So here's what I told them. I said, you call me up. I said, when's your last appointment today? I talked to the sellers and seller's agent. I said, you call me. It was 2:00. I said, you call me at 2:30 and tell me, if you've got an offer, I'll beat whatever offer you have, because it was one of those deals where they're trying to get an offer that day, and you'll see those listed sometimes on the MLS. I said, I'll beat any offer, by $5,000, or I'll give you $1,000. Because I'm like, okay, I'm out $1,000 at most, no big deal. So I had my team looking at all those liens, right? I knew there was $65,000 in liens before I went over there. So long story short, I told them, I made them an offer $5,000 higher than the highest offer. I went around and bought those $65,000 in liens for $4,000.
Oh my gosh.
So, and then we went to closing. And what do you have to do to get clear title? What do you have to have? Can you have those liens on the property still?
Oh, you have to
No.
pay off all the liens.
That's right. So who got paid? Who owned the liens?
You
Yeah,
did.
me. I got paid. And I was a kind man, so I gave them a discount. So instead of 65,000, they paid off 40 and thought that they were very happy to do that. Very
Wow.
simple. That's a little more complex, but it's part of what I've learned just by going to seminars like this one, learning about, how to spend straw in the gold and learning to look at things in a different way that other people look at things. Because if it's not a bank with a lien on the property, people will take money now, and money now, they'll take a little bit of money now for a big lien. I've done a few of these with contractors liens where contractors, they want to get paid, right? Because there's not a lot of rich contractors out there unless you're like DR Holt, some of these big guys, although smaller guys, they just want to get paid. And so it's like 15 grand, but it's been a year or two since they've got their money. Sometimes it's worth, especially if I'm buying the property, it's worth going in and having them assign their judgment or their lien over to me. And there's a lot of things that you can do there. Most of you will never do that, but you can put it up there in your mind. But I can tell you that it was a really good feeling when I walked away from that closing, having negotiated. I paid 5 grand more than anybody else, but if you get $40,000 that I walked away at closing, that was like buying the house for $35,000 cheaper than everybody else. And so if
Wow,
you're an
amazing.
agent and you can, show those things to your clients, and be able to come up with some of those things, under promise, over deliver, the world's your oyster. So I like doing these with you guys, with Eric, because it shows us, things that are possible for us to do and to do them in different ways, because none of us look at things the same way, and so we got to think outside the box. And I don't know how many of you have college degrees, but the vast majority of real estate agents do not have college degrees. And there's a reason for that. And it's because you think out of the box. So some years ago, I had dinner with William Danko, who wrote the book, The Millionaire Next Door. And I had a conversation with a group of people, and we're talking about this. And the numbers were fascinating when they talked about people that went to college. They said that 85% of college students year one want to own their own business, be an entrepreneur, be in business for themselves, like you are, we are, we're all in business for ourselves. 4 years later, that number dropped to between 8 and 9%. And the reason is because for 4 years, you've got people telling you to color between the lines. Okay. Don't go outside of the lines, color between the lines. And they tell you that it takes money to make money. No, it doesn't take any money to make money. It takes an idea. It takes some knowledge to make money. And so, they've got people, trained after 4 years so that only 8 or 9% have maintained that ability to look outside of the box. And those people become real estate agents and attorneys and things like that, in my opinion. but it is awesome. So final question. I've got time for one more question. Anybody have one? Seller finance is a big tool. Go ahead.
We put a couple in the chat. What did you do to buy or negotiate those liens down? Like if I had $65,000 on a lien, I wouldn't do it, right? And so
Okay, so
what did you do to convince me?
Yeah, these liens were like 3 to 5 years old. And so the 3 to 5 years old, they hadn't gotten their money. And so they're looking at anything that they can get. And so I said, here's $1,500, here's $500, here's $1,000. It's like 4 liens on it. Ended up being like $4,000. And so I just said, hey, I buy. This is what I said. So what did I say to them? And actually, I had somebody in my office do it, but I did one of them myself. The office guy did the other 3, I think. But I just said, I buy non-performing liens. You haven't gotten paid. It's like, this is a junior lien, right? And so it's, it's junior to the banks, it's junior to taxes, it's junior to a lot of things. And so I said, I buy liens that aren't always performing. And you've got one on this property and I would buy that, lien from you for this much, which was, I don't know what that would be, like $65,000. That wasn't even 10%. That's probably 5% or less. And I paid $5,000 for a couple of them and, $1,000 for one and 1,500 for another. So that's what I do. I just say, I buy non-performing liens. It's my risk. If you want cash, you haven't got paid on this. If you want cash, I'll give you the cash. Because it's found money. After 3 years, do you think they think they're ever really going to get money out of there? Not one of those people said no, not one of them. And I've done this, more than once. And it's just like, they just don't say no. They want the cash because I'm a sure deal. I'm sitting there with my checkbook in hand saying, I will pay you. And I don't even
So
care
is
if
that
they've got.
after you get the home under contract?
Yeah, I do that after I get the home under contract. So usually if I'm going to look at a home, I pull up, so on the MLS, so you can get the tax data. So I paid whatever it is a year, $100 a year to have the feed to Salt Lake County, and then some others are free and you pay for others, where you can pull up anything that's recorded against the property, and I have title pull it as well. I'm one of the top clients for my title company, so they'll pull within an hour for me, but I can usually pull it myself. And so I have my team pull it up and see what's recorded against the property because I'm looking for a pot of gold, right? As an agent, I can do that. There's nothing that's a breach of fiduciary duty or anything else, especially, if I'm discounting those, which I'm happy to discount because I'm not greedy. Pigs get fed, hogs get slaughtered. So it's two different. I'm working as an agent here and I'm working as, buying those liens or being a lien holder there. They're two different things. But, and if I can do something, nice, that just means I get a nicer gift for the client. If I'm working for a buyer, I can get a nicer gift for the client. But yeah, I can buy those liens. And it's just, I don't know. It's something, it takes a little work, but like I said, that's not the purpose of this call. The purpose of this call today is the mastermind is to show you that there are things that are available in seller financing that you have not considered before. And that there's a deal out there that you would not have been able to do before this. But now, because of this, you've picked up some things that might help you. And then, Mike, did you have a question?
Hey, I just had a question about the event on Saturday. It said members price. What's the member?
Oh, member of the Salt Lake Real Estate Investors Association. Yeah.
Okay.
Yeah, that's always good to be a member of that because there's a lot of group of people that buy properties. I bought last month, in the last probably 60 days, I probably bought 4 properties from agents, and I'm an agent. So usually, if an agent brings me a property, like it looks like it's going to be a good flip or something like that, then what I do to keep agents motivated is I offer them $1,500 as soon as I ink the contract. And so if you'll see like a text will come out from Trevor or somebody else on my team, let's say that, Eric gave me a deal and it looks like it's a fixer upper in, I don't know, Syracuse, because that's up north and Eric's office. You still have that office in Wall Street or in Ogden?
No, haven't had that one open for a while. So
Okay.
it was in the historic post office building, and after 8 years, we still didn't have any signage because of the historic nature. So I pulled the plug on it.
Yeah, no worries. Well, it's up that way. So, but so anyway, Eric gives me a property, says this might be good as a flip. I look at it, yeah, it is good as a flip. And Eric knows that I offer a $1,500, under contract bonus. So as soon as we ink the deal, whether I close or not, I send over $1,500. And so I get a fair amount of deals from agents because they want a $1,500 on top of the regular commission, which is.
Thank you.
Randall, can I make a comment?
Yeah.
Just in reference to Michael's question with the Slaria stuff, it seems to me if you're not a member that you can go once for free. I mean, without having to be a member, so you could just pay the $100 maybe for
not the seminar, but
is that not a thing?
yeah, the seminar, not the seminar, just the monthly meeting. So
Okay.
the year's membership's like $149. And so you have a monthly meeting, discount on a seminar or two, and then there's 2 to 3 lunches a month where they cover different things as well. But it's a good networking thing, and it's I've brought a few agents in there that have done, a lot of business just because investors are always buying and selling property.
Oh, so $125, she says, for non-members.
Yeah.
You
Yeah,
sold.
cheap. Yeah, that's cheap. I
Yeah.
have done these around the country for between 300 and 400 for the same deal. We just set it up there because I wanted to have this one done this year, and I'm still on the board. So, yeah, and it's a good deal. It's going to be it's always worth your money. But if you make one contact, learn one thing, you're going to be miles ahead of where you are now. And then like there's some people that are doing commercial deals that'll work for commercial deals because a lot of commercial deals have seller financing in them. So if you're looking how to branch into that or branch into multi-units, there'll be some people there that are highly experienced at that.
Is
All
there a
right.
class that you recommend for commercial getting started?
No, not really. I would just, I always tell people go to the Investor Association. It's the cheapest education you're going to get.
Awesome.
In Utah, we keep it reasonable because nobody's making a profit. It's not like anybody's getting rich or anything else. Everything that usually goes out comes back in, and everything that comes in stays, in. It's just educational. So, Barbara?
Yeah, I just wanted to, can you hear me?
Yeah.
Yeah, I just wanted to say, go to those meetings, but don't trust everybody. Don't,
Yeah, sure.
don't,
Never
don't
trust anybody everywhere.
just because they're in the meetings doesn't mean that they're not conniving. And I've been in that situation. And I just trusted everybody.
Yeah,
So
no,
just
don't
know
ever
that.
trust everybody. Do your due diligence. It's just
Yeah.
like any other transaction. Always do your due diligence. So,
Yeah.
all
But
right,
it seems
it's been good seeing all of you. Remember the meeting on Friday at the Salt Lake Board? We have the in-person meeting. It's the last one of the year, isn't it, Eric?
Yeah, it is. And I won't be able to be there. I hope a lot of you guys can make it. I'm back to Grand Junction again this weekend. So, yep, that's the deal I made with my wife. She could move here and live with me, but we go back to Grand Junction once a month, and it's not something I would renege on for her. So, if you can make it, I usually get great feedback from that meeting. It's usually a really good meeting for people to attend. Tomorrow, if anybody wants to make the drive to Farmington, we are meeting at my lender's office. The address for that is 810 Shepherd Lane. And we're going to be talking about AI tools. So 9 o'clock is the workshop. 10 o'clock is the class. We're going to be talking about using AI tools. I get a lot of questions from agents wondering how to use AI for real estate. We'll actually be going through and doing an exercise with that tomorrow. So that's tomorrow at 9 and 10 in Farmington, 810 Shepherd Lane. Thanks, everybody. Thanks, Randall.
All right. You bet. Have a wonderful day. And then, Eric, I'll give you a call.